Watch what they're doing, not what they say they are doing. If you don't do this, your competition will, and you might not have a spot. There's tons of dry powder. Retail investors can do extremely well, and I believe we need more people to launch funds to understand how this game is played because it's the most lucrative game on earth. Okay, how many people have raised money before? Okay, keep your hands raised if it was like a single deal, like you bought a business, you did a single deal. And then how many people did a fund, full out fund? A couple people here, two. What'd you guys do for a fund? What was it? Just shout it out. An opportunity fund in real estate? Opportunity zones? Or just opportunistic? Opportunistic, okay. Very cool. You guys did it together, partners? Cool. How much you guys manage? How much you guys raise? 90 million? That's awesome. Both you guys together? What kind of deals were you buying?
Deals in El Salvador, a lot of land deals.
Oh, okay.
Yeah.
Is this like wink wink El Salvador, or is this like...
No, it's the country El Salvador, but...
Like actual El Salvador?
Yeah.
Yeah, very cool.
But,
Okay.
yeah, a lot of funds have been in other businesses, all real estate related though.
All real estate, very cool. Clap it up for these two, 90 million under management, I love it. Clap it up, you guys, clap it up. All right, so the question, and I guess I'm already alluding to this, I'm not gonna use very many slides, but here we are. We live in interesting times. I just wrote a full op-ed that got picked up in Tech News Crunch about the tariffs right now, what's going on with tariffs. This last few weeks has been we run me and Dan Young in the back. Dan Young, stand up real quick. Me and Dan run a about $25 million crypto hedge fund right now, and then I run a GP stakes fund as well. We've been watching this very closely. Dan runs a computer business and a few $100 million in sales. So they had ships parked off the coast last week. I believe there's 3 economic wars that Trump is waging. Number 1 is with the other countries. Number 2 is internally with Jerome Powell, and then obviously number 3 is with China. And we have Scott Bessent. Do you guys know Scott Bessent? Bessent, excuse me, I said it wrong. Scott Bessent. He's the Treasury Secretary currently. He worked with Soros and Druckenmiller in the 90s to break the Bank of England. Have you guys ever heard this story? Famous story on Wall Street in the 90s. They found the British pound was pegged against, it was before the euro, it was pegged to the German mark, and they believed it was overvalued the way they were doing it. So they, as a hedge fund, one hedge fund in New York, put this huge bet against the British pound and essentially brought the British government to their knees. They made, I think, about $8.5 billion on one trade. They call it, they broke the Bank of England. They broke their entire, essentially the British pound. They broke it so bad they had to reinvent and go to the euro. That's where the euro was created. This is the guy who's the Treasury Secretary. Is there a chance they're trying to do the same thing to China right now? Think about the bigger game here of what's going on. How much leverage they've created with negotiations. China's got huge demographic issues. They've had a baby boomer population and a one-child policy. Their stock market's getting decimated right now. Could it be Scott Bessent is on the job to break China's economy so that they can join and fully work with us? Now, you guys are mostly in real estate, correct, this group? I've been told this is a very sharp group. This is like a high-end group, so I'm going to go deep with you guys. Does that sound cool? Yeah. You guys good if I go deep? Yeah. Okay, this last week, oil prices dropped drastically, if you didn't notice. Lumber, a lot of materials, steel prices dropped a ton, which is good for construction, good for real estate. We will see how this plays out, but if you believe, so if love him or hate him, this is not a political conversation, but if love him or hate him, Trump, he's doing what he says he's going to do. I mean, everything he said he's going to do, he's doing, right? Whether you like it or not, I'm going to close the border. I'm going to do the tariff. He is following what he's saying he's going to do. Interesting plan. I don't have a ton of time to talk about this, but if you somewhat believe that this is going to unlock United States production, United States manufacturing, United States energy, and overall the United States economy, we are poised, I think, to be in a pretty cool economic situation in the next couple years. And the fact that you're here today with Chris and this group, and you get to talk about some pretty high-level stuff, I think we're poised in a very interesting moment in time. I don't think there's ever been a better time in history to be an entrepreneur than 2025. People look back like 1980s. I'm like, dude, 2025 is a phenomenal time to be an entrepreneur, to be in this game. We have so much power to do cool stuff. Anybody with me? Yeah? Now, I was like, I could spend 30, 40 minutes talking about tariffs. I wrote a whole op-ed. You guys can go look it up. What I want to talk about next, though, is how we capitalize on that. I think we could be very near to a boom in the United States, an absolute economic boom. Or if you don't believe that, maybe it's going to go south. We can make money when it goes down, too. Guess what? Fund managers make money when it goes up and when it goes down. So who cares? But I kind of care because I live here. And most of you guys are in real estate. And I'm more in favor, and not in favor, and in the medium to long term, I think we might have a really cool situation. Furthermore, this morning, you guys see Trump's been putting a lot of pressure on Powell to cut rates. He just asked the Supreme Court if he can fire Jerome Powell. We will see. I mean, he is putting a lot of pressure on Jerome Powell to cut rates for people like us, to unlock real estate. I'm looking at the Trump plan. Over 4 years, you have to have rates lower. You have to have new trade deals. You have to have a secure border, and you have to increase and get oil prices really low to unlock an economy. One of those steps is Jerome Powell and cutting rates. I think the second economic war is raging is with Jerome Powell. There could be a chance where he's like, I'll crash the stock market, Jerome Powell. You need to cut rates. I'm okay with the market crashing. They've said that. Last week, Scott Bessent was like, it's the Mag 7. These are the wealthy people that are losing money. I don't care. Middle America doesn't care if the stock market crashes. We care about rates being lower so we can buy houses and build and construct and do what this group wants to do. Does that make sense? It's very interesting. If you actually go watch Scott Bessent and Howard Lutnick, brilliant people, brilliant people. We'll see how it plays out. So that frames the conversation today of investment funds and kind of what I talked about. So you already know this, but I do what people do, not what they say they do. There's a lot of people online, there are a few of them here. There's Cody Sperber, there's me, there's Chris Crone, and I like to go, I watch what they do, not what they say they do. What do these people all have in common? There's more. They all are running funds. All these online influencer people, a lot of them are going and launching funds. You guys notice this common trend? Look, so you have Grant Cardone's, obviously their funds. Cody Sanchez has their private equity funds. Chris just talked about he's opening a new fund, just barely 5 seconds ago. He just said it. Ty Lopez, they bought Pier 1 Imports, Radio Shack. It kind of crashed and burned, but anyways, he was moving in that direction. Furthermore, these guys bought our program a few years ago. Before they blew up, Alex, we were hanging out, and he actually put an offer on her business. They're doing private equity. Watch what they do, not what they say they're doing. I was with Russell Brunson just a few weeks ago. He's buying a ton of businesses right now, doing all private equity transactions. Watch what they're doing, not what they say they are doing. Most successful people in this space right now are moving into the fund game. Why? Because it's the most lucrative game on earth. Chris has talked about this a few times on social media. You look at the Forbes 100 list, the number one category of billionaires is fund management. Number 2 is tech, number 3 is fashion. It is investment fund money management, this game that I'm about to talk about. All right, my goal for today, why you should consider launching a fund. Does that sound good? Okay, let's talk about funds and what they're doing. So this is for business owners or investors who want to scale. Who's a business owner in here? Guessing most. Who's more of the investor side? Less? I mean, maybe a little bit of both. Somebody's like, I'm a business, I'm a little bit. Anyways, either one, this is an ability for you to scale. Now, I think I've got some slides in here. I'm going to kind of skip through. We are seeing mass consolidation. This is why this is so important. We are seeing huge consolidation of brands if you don't start a fund. Because you're like, Bridger, I'm good with what I'm doing. I just do my own deals. I'm good. Did you know in 2021, 1 in 7 homes were purchased by Wall Street? 2022, it was 1 in 5. 2023, it was 1 in 3 homes were purchased by big funds, big firms on Wall Street. Residential homes. These aren't mortgage pools. These are actual the homes. Who are all these cash buyers? If you don't do this, your competition will, and you might not have a spot. I think this is very prevalent, and especially I have these slides for the world. We're seeing huge roll-ups of pretty much every industry on earth right now. We're seeing mass consolidation efforts. I'm going really quick. This is like usually like an hour and a half, but I'm going fast today. So how do we play in this game? There's tons of dry powder. Retail investors can do extremely well. And I believe we need more people to launch funds to understand how this game is played. Now, let me walk through this. We call ourselves the Wall Street Rebels. I'm going to get the marker here and walk through the kind of path that most people are on. And again, I mentioned business owners, investors that want to scale. Okay? Why would you set up a fund? Bridger, I'm already doing deals. Maybe you raise money from family and friends. Hey, we're doing deals. I had a guy in my group. He did 4 house flips a year. Every year he did 4. He's like, Bridger, I'm doing good. But he's like, I do want to scale. I want to see how this looks. We set up a fund with him. The next year, he flipped 72 homes. The next year, went from 4 to 72 in 1 year, setting up a fund. So why does this happen this way? Let me just ask you. Let me ask y'all. You guys are all doing deals. You're all sharp real estate investors. If you had a fund of, let's call it $10 million, just sitting ready to go, could you do, obviously, more deals or less deals? Just yell it out. More, obviously. Could you do deals faster or slower? Faster. Okay, those are the obvious ones. Do you think banks would give you better or worse interest rates? Probably better. Do you think insurance would give you better or worse rates?
Better.
Probably better. Interesting. So you can close faster, you can do more or bigger deals, you get better debt and better insurance. Furthermore, if you guys are doing value add, you got crews that are helping you fix, like for a house flip, for example, you had the paint guy, the carpet guy, the whatever guy. He had a volume discount. He did so many houses that the average cost per flip dropped. Interesting. Any of you ever looked at a deal? Anybody ever, I've done this before, ever bid on a deal and someone outbids you and you go, they overpaid. They're idiots. Anybody done this before?
Yes.
Someone beat you on a bid and they don't know what they're doing. These guys are idiots. They're gonna lose their shorts, and because I know, I did my pro forma. My pro forma says we can pay $800,000, and they paid $950, and they're gonna lose their shorts. Yes? Am I the only one? Yes. Maybe it does pencil, because they're not playing the same game that me and you were playing. Maybe it does pencil because they have lower cost of capital than you do. They have lower debt. Their insurance costs are lower. Their average cost to do value add is lower than yours. I'll give you a real world example. One of my mentors, they were bidding on a $100 million property, big property, $100 million, okay? That was the asking price. A syndicator, someone who puts a deal by deal together, came and bid $100 million, roughly. I'm giving you rough numbers here. 100 million though, rough bid, okay? My mentor's fund, they bid 94 million. They won the deal at 94 million. Why? Exactly, the terms of the deal, they were more secure. If you're a seller and a fund can close in 3 weeks, and a syndicator is going to try to pull money together for the next 6 months, and they might close, they might not, I might just take which they did. They took the $94 million bid because it was certain, and they had a reputation as a fund who closed. They got a $6 million discount on a property because they did this. Is this making sense? You guys seeing this path? This is why most successful people in business end up in this route, end up in this space. The kind of path that most people go that I would tell someone to go on. You have what I would call this the test phase. This is your own money. A lot of you are in this deal right now. And then I would say the next phase, we call it a single asset fund or a syndication, where you're doing one deal at a time and you're actually raising money for that deal. How many people have done that before? Like we said before, quite a few of you. The next tier of this would be I'm gonna draw it down here, a full out fund where you're doing multiple deals in one. What I'm saying here is, hey, I'm gonna just use house flipping again. Hey, we flip on a deal by deal basis. So every time I flip a house, I gotta call my investors, call my hard money guy, call whatever, get the money together, and we're closing on the 15th, right? A fund says you're gonna invest in my fund. We plan to do 38 deals over the next 2 years. And as an investor, you get diversification on all 32, and it's gonna be a blended average return. And of the 32 deals, 4 are gonna go bad, 4 are going to do amazing, and the blended mix is going to be a blended return of 18.5%. Does that make sense? And then we can get all those great things that we have being a fund. Does that make sense? That's kind of how most people evolve into this game. Now, I'm going to go to the next piece here. So what does this look like? Okay. Actually, how do we put this together? We help people do this all the time. The actual tactics of like putting it together. Many of the funds are using a GP. LP structure, which is a general partner limited partnership structure. You guys have heard of these before, I'm sure. You have limited partners that come in as investors into the limited partnership. General partners manage this firm, and then you go and make investments out of this. Let me tell you a little story though of why this is so cool and awesome. Anybody seen the movie The Big Short? The Big Short is a phenomenal movie, okay? There's a great scene in there. Because I know some of you right now, well, I don't want to raise outside capital. It's scary, which it is, by the way. Whenever you take outside money, you got to be very committed and serious what you're doing. It's a very serious endeavor when you take someone else's money to invest. So just know that blanket. But in a syndication, okay, I'll draw out a syndication here. If I did a single asset or a syndication, maybe some of you guys have done this. You set up an LLC. Anybody done this before? An LLC, and people put money into the LLC and they buy shares out of your LLC. Anybody done this? Some head nods, yeah? That's how a lot of syndicators do it. Let me just give you an example of this. So The Big Short. In a syndication, in an LLC syndication, some of your friends or partners, they can kind of elbow you out a little bit. If they don't like what you're doing, if they've got a tax bill that just hit, they call me, Bridger, hey, can you sell the property faster? I got a tax bill that just hit. I need my liquidity now. Like, can you get me out? And if you're in an LLC syndication, you might do that. They're your investor. You got to get them out and work. Anybody feeling this? Anybody done this before? A lot of head nods? Yeah. In a fund, the beauty of a fund, you don't have to do that. Your fiduciary responsibility is to do what's best for the fund, not individual investors. Back to The Big Short. Anybody remember the scene? So this is The Big Short. Is about 4 fund managers all shorting the housing market in 2007, 2008. One of them is Michael Burry. You guys remember this scene? His white-haired investor comes in the office and is yelling at him. He's like, give me my money back. Because to hold the short position that he had, this is kind of just a little nuance in the movie, if you go look it up, he was spending about $6 to $8 million per month to hold the position. And he was spending this, he did this for like 18, 19 months in a row. He was spending $6 million a month to just hold his short. And the market hadn't fallen yet. The market hadn't fallen. He's wasting $6 million a month. And his fund is now tanking. And his investors come in and go, give me my money back. You don't know what you're doing. And he goes, it's going to fall. It's going to fall. I know it's going to fall. And because he had a fund, he just said, sorry. You invest in the fund. If you want to pull your money out, you can put a withdrawal request in. It's a 50% penalty if you want to pull your money out. That's the rules of the fund. I don't serve individual investors. I do what's best for the fund. You've hired me as a fund manager. What's best for the fund is to hold this short position. And if we hold this short position, like what happened in the movie, they made hundreds of millions or $1 billion, whatever it was, and everyone made tons of money. That paints so beautifully one of the great reasons of having a fund. That's why most people end up in a blind pool type of fund. Is this making sense? Dry powder just spiked to $13.1 trillion, waiting on the sidelines at private equity firms trying to get deployed. You have a baby boomer wealth transfer, $84 trillion in assets trying to get passed down because people are going to die or just age out. Okay, pretty interesting. There's a lot of money in the sidelines right now. But we walk people through this thing. It's called the Fund Launch Formula. It looks very complex. We can dive deeper if you want. But we walk through a 4-step formula to help people launch and raise money for their funds. Everyone always like, okay, Bridger, how do I raise capital? How do I do this, right? How do I put this together? So I think about capital raising 3 different ways. Number 1, am I even in the room with money? Am I even in the vicinity of people that have money? And I'm talking more high net worth individuals. We can talk family offices, institutions, but are you even in the universe of them? Are you in the room theoretically or actually like physically? Are you even around these people? Number 2, you're in the room, but can you actually connect with that person? I have a rich friend. He grew up, his family's super rich. He gets in a lot of fancy rooms. But no one sees him as a person that could actually like raise money or deploy capital, right? So there's a difference of being in the room and then connecting and showing yourself as someone in the room that actually has value. And I want to hear more about your deal. Can you tell me more? To get me to the 3rd phase, which is the close phase. This is where you actually have maybe like a pitch deck. You're actually pitching them the deal and they're actually closing. Does that make sense? You can call it almost like a funnel of investors here. So I ask the question to people, where do you feel like if you're trying to raise money, where do you fall short? Are you in enough rooms with enough people? Maybe you're in the rooms, but I don't know how to connect with people. Or maybe I'm in the rooms, I'm connecting, but man, I try to close them and just no one's closing. And I'll tell you with me, I switch sometimes. Sometimes I'm in a lot of great rooms, I got a lot of great connections, and I can't close. And other times I close. Me and Dan, recently with where crypto's at, crypto's so low, it's so easy. Everyone's like, we see the vision, we have such a clear path of where things are going, we believe. We close like everybody, and then it's like the middle funnel is part of it. That just ebbs and flows as you go. We can give more details on that. So if I think about the 3-stage raising capital, now that's more like, how do I raise money from investors? But the bigger question is this: what's your offer? What's your actual value prop? A lot of people, myself in the past included, think just because you are doing a real estate deal, people just love you. Like, oh, you're doing real estate? Like, oh, yeah, they should love to invest in me. In reality, they don't think about the actual marketplace they are entering with their deal. And there's a fun framework here. We talk about building out your edge. Your competition when raising capital are fund managers that have already done this for 30 years, that charge a 2 and 20, that are in value add multifamily, that already do this. Why should I invest with you than the guys who have done it for 30 years, are on Fund 4 and managed $1.8 billion? And a lot of us launch Me Too products into the investment space. Is that kind of making sense? Very few at the beginning sometimes think, how do I actually position my fund so that investors are dying to put money in? That's the bigger question. People always ask Bridger, like, what's the hack that I can like get an investor over the line? I go, have a great deal. Have an amazing, that's why we put this, if you see the 3 phases, back to deal 1, have an incredible deal. Can we find asymmetrical risk truly on this deal? Can we really find alpha on this? Do you guys know what asymmetrical risk and alpha is? The idea of relatively low risk for high return. So it's called asymmetrical risk. You guys have probably heard low risk, low reward, high risk, high reward. Have you guys heard this before? In finance, there's a term called asymmetrical risk, where you can find things that have relatively low risk for high return. For example, let's say, what's your name right here? Milo? Milo, we're in business, okay? We're business partners, all right? We're business partners. We got a business. You guys are going to invest in me and Milo's business, all right? And let's just call it medium risk, medium return. We're doing a cool business together. And you guys are looking at it, okay, there's probably medium risk, and we're sharp guys, medium return, we could probably do pretty well, okay? And then we just announce, me and Milo say, hey, Jeff Bezos and Elon Musk are going to be our 2 other business partners. What happens to the return? Does the return go up or down? Probably way up, right? Like, what's the chance of success? Like, way up. Now, what's the chance of failure, the risk? Maybe the same or goes down. They have so much resource, right? So all this, just by adding 2 business partners, we just created asymmetrical risk. Does that make sense? It is totally possible, especially public markets, a lot harder. In private markets, happens every day. House flippers have asymmetrical risk. I have a buddy who has, he's flipped 300 houses. Bridger, I have flipped 0 houses. If I went and flipped a house, I'm just not that handy of a guy. My family always makes fun of me. They're just like, you suck at doing handy things. You know, like how you're supposed to be a man and like go fix the thing at the staircase and like whatever. I'm just not that guy. I'm just not. This is what I've tried a bunch. I got all the tools. I try everything. It's just I'm not that guy. Guess what I do? I hire someone who is the guy. I'm like, I'll just hire somebody. I'll just pay them. Who cares? But my family loves to make fun of me because they're super handy. They're building bookshelves, and you know, like in the weekends they'll build a whole deck. And I'm like, what the freak? How did you build a deck? Oh, we just got some wood at the home. You know. Anyways, if I went and flipped a house, high risk and probably low return. But if my buddy Mike, who's flipped 300 houses, or some of you guys in this room flipped a house, it's low risk, high return. A lot of you have asymmetrical risk already. How do we paint that into an offering for investors? Is that kind of making sense? Yeah. That's how you raise big capital. How do you show that you're different than the competition? How do you show that you really have a deal? And some people, when they've raised their first dollar, they're just like, hey, you'd love to put money in, right? Versus if you have truly the confidence, I would mortgage my own house 7 times over, and I'd take my grandma's money to put in this deal because it's so good. I've looked for deals for years. This deal is the best one. And yes, there's always risk in everything, but man, this one's locked. You'll be surprised and really have that conviction. Run through different models to make sure. I wouldn't just raise money on a flim. Chris or Bridger told me to raise money. I'm going to go try it out. The deals will help attract investors that find you. Does that sound fair? Okay, last thing I want to share, and we'll get out of here. Let me go back a little bit. Business owners. My business owner's in here. Another interesting category you guys could use. This is a true story. A guy calls me. He goes, I have a gun store. We do about $10 million a year. I want to buy out my competitors. Like, how could I do that? I said, well, we could set up a fund. And he goes, what do you mean? And he goes, well, because he was like, do I have to give up equity? Do I have to give up debt? Do I go like to the Shark Tank style, give up 20% of my business, And I said, what about this? What if we set up an outside fund, raise money there with the investment strategy that we're going to go buy up all your competitor stores in the area? Those competitors are owned by the fund. Okay, they pay returns to the fund, but they license you to help run the store because you're good at running gun stores and you can put your logos on there. You can put your branding on it. They can use your supply chain. Essentially, they're part of your empire. Is that interesting? You keep your gun store as is. Doesn't move. Equity's all the same. You set up an outside vehicle that buys your competitors, licenses your company, and now you have a monopoly in an area. Is that interesting?